Hi everyone, Piers Bolger here, the Chief Investment Officer at Viridium. Well, as you know, we've been working very closely with the Carrington team over the last couple of years, particularly as it relates to the investments and the portfolio construction side of the business. And, you know, Nella, Jason and Brian have obviously been spending a lot of time with you in regards to portfolio repositioning and how to set the strategy for your portfolios going forward. That's certainly been the case in regards to the rebalancing of portfolios. And as I said, working very closely, obviously, with Jason, Nella, particularly in the context of those portfolio settings and the strategies that we've been working to as an investment committee. And obviously, as we're all well aware, February and March were very challenging months for equity markets particularly. We saw our local market down over 20%. Global equity markets were also lower, not as low as the domestic market, helped obviously by the decline in the Australian dollar, but significantly lower from where they were back at the end of 2019. The first quarter for this year was a very challenging 3-month period. But in the context of portfolio position and portfolio strategy and obviously the work that the team's been doing from a rebalancing perspective, it can lead to obviously some high emotions. You know, why should be rebalancing back into equity markets when they've been down and continuing to potentially look like they're going to remain weaker for some time, just given obviously the economic backdrop, both domestically and globally, and the impact that that's having on corporate earnings. And as an investment committee, we thought it'd be worthwhile maybe just sort of sharing some of our thoughts around that and why we think rebalancing, why we think staying the course is really important in terms of building long-term wealth. And the chart here I just want to show you is the performance of the Australian equities ASX 200. And you can see there the chart goes back from December of 1992 all the way through to the 30th of April this year. And I think it's important in the context of including the April numbers, because when we think about the performance of equity markets in April, the market had quite a solid rebound. You know, we saw the market up roughly around about 8.5%, and every part of the market actually delivered a positive return, and particularly those parts of the market that were sold off heavily during March. And if we just look at the best performing sectors over the April period, energy sector was up roughly around about 25% for the month of April. It was down 37% in March alone. A-REIT sector, as another example, was up nearly 15% during April, and it was down, as I said, about 35% during March. So when you think about that in the context of portfolio positioning and rebalancing portfolios, it's one of the reasons why Nella and Jason and Brian have these conversations, is to always try and stay the course, because it's very difficult to time and predict where markets are going to go on a day-to-day, month-to-month basis. And this chart here really just tries to amplify that view. And what we're showing you here is basically over that 27-year period, if you remain fully invested in the market versus if you tried to time the market and missed out on the next best 20, 30, 40 or 50 days over the course of that period as it related to Australian equities. And as you can see here, that if you've remained fully invested for that period, your return profile would have been just a tad under 9.5%. So a very good, solid investment return. That's including both capital return as well as obviously dividends being paid throughout that period. But that's a return profile that we would expect for Australian equities over a very long period of time. But if you tried to market time and you tried to avoid periods where the market was falling, if you just then started to miss out on some of those best performing days, and we actually had one of those days where the market was up 7% at the back end of March, if you miss those best performing days, then that can have quite a significant detrimental impact on overall portfolio return. And you can see here that if you go all the way and you miss the best 50 days, your return profile goes from about 9.5% all the way down to roughly around about 1 to 2%. So a significant decline in the overall performance of your portfolio. So when the guys have the conversations and when we sit down as an investment committee and when we look to build out the strategy, it's very much built around, well, what are we trying to achieve over that longer term? We're certainly very conscious of the risks that are prevalent in markets, particularly at the moment. But certainly in the conversations that said Nella and Jason Brian are having with you, that focus is really around staying the course. Clearly, if your strategies change or your circumstances have changed, then the guys will make those adjustments accordingly. But the conversation is always around, are we achieving what we're trying to do? Are you comfortable with the risk that you're taking on in your portfolios? Because it is very, very difficult to time and predict markets, and even the most ardent professionals don't get it right all the time. So in the context of setting that strategy, we thought it'd be really valuable just to sort of show you the rationale as to why we have those conversations, why those conversations are important. Because ultimately, when you're rebalancing in difficult market environments, as we've seen through the end of March, the upside can happen and happen quite quickly. And that can dampen, as I said, that overall negative impact that we've seen in periods such as February and March of this year. So we just thought it'd be a little bit of a snapshot in some of the thinking that goes behind that conversation around rebalancing, portfolio strategy, and maintaining that focus around implementation all the way through in terms of creating that long-term wealth that you're looking for. As always, the guys, I'd love to hear from you if you have any queries or concerns about your portfolios, and we look forward to catching up again soon. Bye for now.